Hello guys, today is Monday, February 24th, 3:09 p.m. And if you're watching this video, you are kind of worried about the things that are developing with Palantir, but I think we should remain calm. And so I have a little video clip, roughly around 3 minutes, from Tom Nash about the general overall strategy and mindset we should have going into a dip. Alright, I'm just going to play the video now.
So let's assume we have three style of dollar cost average investors in Palantir. Cautious guy, average guy, daring guy, right? So all these investors do is dollar cost average into Palantir. So they are my people, but they use completely different strategies. Cautious basically says, look, whenever the stock drops 20% below the 52-week high price point, I'm going to stop dollar cost average and I'm not going to resume until the stock climbs back up into that area above 20% of the 52-week high. And I'm just going to buy when the stock is riding high. I'm not going to buy when it drops. The average investor basically says, I don't care about the noise. All I'm going to do is dollar cost average $100 every week, no matter what. It's up, it's down. I completely ignore the noise. And daring, he basically is my dude. He says, look, whenever the stock drops 20% below the 52-week high, I'm buying at $200 per share. And as long as it stays below 20% of the 52-week high, I'm going to keep doubling down at $200 every week. And if the stock climbs back up into that region, into the 20% of the 52-week high, I'm going to go back to $100 every single week. So basically, cautious only buys when it's up, average buys $100 every week no matter what, and daring, he buys 100 every week, but if the stock drops, he buys 200. And he continues as long as the stock remains low. So check this out. Going back to October 2020, when the company went public, here's the data. It's going to blow your mind. After 1 year of this, cautious was up 25%. Average was up only 13%. And daring was only up 9.5%. So the results are simple. The best approach is to be cautious, right? We've just shown you that after 1 year, this cautious guy has more than double the returns of the daring guy. But guess what? Daring is playing a marathon game, not a sprint. So here's what happens. 3 years into this journey, we look at the results, and the results are starting to look a little bit different. Cautious guy is down 6% because the market has turned on him. And daring guy is up 32% because he's buying the dip more aggressively. And now we look at all the way to 2024, current time. Cautious is up 110% because at the end of the day, the stock has doubled and he's doing fine. He's down 100%, 110%. That's not bad at all. The only issue is that average has done almost double, 194%, by just staying in the market and dollar cost averaging nonstop. But guess what? Daring, that doubled down, actually improved and got to 220%, even better. So while everybody made dollar cost averaging into the market, the one guy that has done better, significantly better than everybody, is daring, using the double down DCA approach in which you buy more when the stock is down and buy less when the stock is up. The numbers don't lie.
Guys, I am back, guys. Final take on this. All right. So right now it is 4:55 and Palantir closed the day in this gap that happened during the earnings. We had a huge run up. Then I guess we're closing the windows, so to speak. We blew past the 100-day, not the 100-day, the $100 support level up here. And now we're going to move down to test the $85 one. All right. So I think what's going to happen within the next week or two is that it's going to come down to the 85. It might bounce around here for a week or two, and then it's going to shoot back up to 100. All right. So fundamentally speaking, I believe that nothing's changed. Alex Karp decided to sell less stocks than he was scheduled to. And we still have the government contracts, and Elon Musk is basically in our back pocket. Nothing new has happened. So this is just price movement at this point. All right. So the game plan is when it moves down to around 85, we want to start opening up put spreads. I want to say sell the 80 to 85 if you're being hyper aggressive. If you want to take a more conservative position, you might want to dial it back to, I don't know, 0.7 delta, 70% chance of success. But for me, if it reaches 85, I'm just gonna go full blown aggressive and just sell to 85, buy back at 80 maybe, or 70. It's fine. So you can buy back at 80 or 75. There are $5 strikes out there. Expiration date, I would say go out to somewhere around in March or April. Either one of those will work depending on your own risk profiles. Should be expecting to collect somewhere around 30 to 50% premium on this play. Pretty good overall. All right. So if you second play that I recommend would be just buying straight up calls, but for these you might want to go up to, I want to say 45 to 90 days to give it some room for the system to shake out a bit, and you want to take profits at around 50. Same thing with put spreads too. You want to take profits at around 50. All right, so RSI is moving into the oversold territory. That didn't cross quite yet, but it should bounce around here somewhere. So great stock, great fundamentals, great CEO leadership, contracts locked in. It's just got a little bit overly excited here, coming back into the zone. That's about it, guys. Good luck, stay calm, keep buying.